G'day. This week I'm going to talk about something that becomes topical this time of year. Every year with tax time coming through, and it also does become topical at various other times, and that is negative gearing. Let's state that this really relates to rental properties, and negative gearing is something that everyone, it is one of the great Australian dreams, is chasing. Now, let's be clear, firstly, what negative gearing is when we're dealing with property. The negative gearing is just a mathematical result. It is nothing more than your expenses being greater than your income. And the outcome of that is that if you take those expenses away from the income, you've got a negative result and therefore a negative gearing impact. Now, that negative gearing result is largely, in most cases, a big reason for that is to do with the interest claim, as sort of we would expect. Now, I would not disallow an interest claim. An interest claim is allowable to be made against income-producing assets, whether they are, shares in listed companies or private companies for that matter. An interest claim against the finance costs of the motor vehicle you've purchased and claiming as a work-related expense. An interest claim against, what was the other one I thought of? Dollars borrowed to invest in a business or whatever it might be. So that being the case, I would allow the interest claim to continue. And if that means that the result is that there is negative gearing, then I would continue to allow that to be offset against salary and other income. Where I feel that the legislation could be tweaked to have several benefits would be where taxpayers have a Quantity Surveyor report prepared and they make a claim for the depreciation on the bricks and mortar, down to light fittings and all sorts of bits and pieces. That is where I would make the change. I would disallow, moving forward, I would not make it retrospective. If you own a property and you've had a depreciation report prepared and you're making that claim, continue to make the claim. However, on properties settled after a certain date, I would move to disallow those Quantity Surveyor reports to be prepared and disallow that depreciation claim. It's a non-cash item, and it is often making the difference between a property being affordable or the numbers stacking up from an investment perspective or not. And I think this could really change things quite drastically. And that's where I would make the move. Again, I would not make it retrospective. Continue to claim the depreciation if you are already doing so, and that would continue for me. From my point of view, it would make a substantial difference to the revenues going into the ATO coffers. It'd be a significant impact on their bottom line, as it would impact a depreciation claim moving forward on a number of properties. We wouldn't be having to make wholesale changes to legislation to say interest is claimable here but not there. And it potentially also could improve affordability for owner-occupiers, because the question of whether that investment stacks up from a numbers perspective is not impacted by a depreciation claim, where for an investor they will be taking into account the amount of depreciation that they can claim, particularly in those first, say, 5 years, which is where it makes all the difference for the investor. I think this is something that needs to be discussed further. I think banning the interest claim or disallowing any negative result to be quarantined, I think that's a bad way of going about it. But I do think that this is an easy way of getting the desired outcome for the overall economy. I'm TC. That's my 2 cents.